Joining us now exclusively, Six Flags Entertainment's Chairman and CEO, Jim Reid-Anderson, here at Post 9. Thanks for joining us today.
Pleasure to be here. Thank you.
So, challenging macroeconomic environment in China. How would you sum that up?
So I'd sum up the year as being remarkable. We grew our business to record levels for the 9th year in a row. And in the quarter and for the year, we had records. So what is happening is that China, which has had, as you know, macroeconomic issues impacting it, and GE and others have had problems there. For Apple, we know, we have had a similar problem. But this business represents, its international business represents less than 3% of our revenue. It's a tiny piece of our business. Our core business is growing very strongly. As I said, 9th record year, multiple record quarters, and we're positioned for our 10th record year in 2019.
In terms of core business here in the U.S., how would you assess the situation from a macroeconomic standpoint?
Very strong. The consumer is very strong. We've seen the ability to increase our membership levels dramatically. So we've got something like 8 million active pass base holders, so people who have either our season passes or our memberships. We also have been able to take pricing up in the 3 to 5% range pretty consistently. We've sold more dining passes than we have in the company's history. And so when I look at that and I say the core consumer is doing just fine. We've also added on some theme and water parks, smaller ones that are very close to our existing parks. And that strategy's worked very well. And by the way, even with this issue that you raised with China, our international revenue and profitability was up in the year.
So you picked up 5 new theme parks in the middle of last year. One of the things I saw an analyst note is that the performance in food and merchandise at those parks was not up to par of your existing parks. I mean, in a way, that might be a positive if you believe that you can get those to the level of your existing properties. But I wonder, is it that, or is there some regional difference in the areas where you have those new parks that's going to maybe prevent them from reaching that same level?
John, it's such a good point, and you're thinking about it exactly the right way. The reason that we buy these parks is that they're smaller parks that supplement our existing theme parks. We're then able to take them where they are lower performance, and we succeed in driving them up.
How are you going to do that?
So there are various things that we do, but basically it's the Six Flags name, it's the brand, it's what we bring to the party, it's thrills. That's what we're all about, is thrills. So people who've normally gone to those parks, if they buy one of our season passes, they can go to any Six Flags park anywhere else. So they love the ability to do that, and that's why our active pass base has hit an all-time record high, 8 million people.
Taking nothing away from the success you've had, which has been significant, as you point out. Your stock's getting crushed today.
It is, yes.
Is that because you did have to modify, so to speak, your medium-term outlook and conclude, as you said here, that you will not be able to get to $750 million of modified EBITDA by 2020?
Yes, so a part of it is setting out a goal. So we've had a goal to get to $750 million of modified EBITDA by 2020, and basically what we said today is that goal is more challenging now. And what we've said is that at a minimum, we're targeting getting to the same number by 2021. So we've shifted it out a little bit based upon a number of things, but it's really the delays in China that we've seen in park openings.
Is it anything else? I mean, you talk about lumpiness, so potential lumpiness as well.
Lumpiness is the same thing. It's exactly the same thing. So if you look at we have 5 imperatives, and international is one piece of them, China is one piece of international. And the other imperatives that I've described have all been growing very robustly. And that active pass base that I talked about, that success, the membership success, culinary, dining passes over 1 million. I mean, it's a really strong base that we've got of people who are with us, and it's recurring revenue that we will be able to grow for the long term.
So you've pushed out this target. Are you surprised? Your stock's down 14%?
I am very surprised, because our profitability this year, 2018, $550 million of EBITDA. Go back to 2009, we had less than $200 million of EBITDA. 9 record years, and our yield today is now 6%. A dividend yield is 6% with a growth stock. We grew our revenue, we grew our EBITDA, we grew everything. And so expectations, maybe we're a little further ahead.
Well, clearly.
Yeah, and so our goal is to just continue to operate. We're going to deliver a 10th record year. We're going to do this and show people consistently, not only do we take our stock up, we take our dividend up, we're going to drive success for the business for the long term.
Who's buying these passes? Is it millennials and young adults, or is it someone else?
It's actually everyone, Morgan. It's consistent. It's across the board. So we'll get the young families, we'll get teens, we will get young adults. It's pretty much everyone. It's split equally.
What's the technology and efficiency challenge in your business? There's a lot of talk about placing sensors in various places,
yes.
Cameras, being able to understand the flow of traffic through a park. Is that what's going to distinguish you or somebody else, being able to figure out how to drive more efficiency in the customer experience, figure out when they want to buy and what?
Yes, there are a series of things. So when you think about technology, it comes in many forms. So it's in our DNA. Innovation's in our DNA. We have the best thrill rides on earth. Nobody touches us. That's well known. But in addition, what we're doing behind the scenes, we do a lot of research to find out what our guests want. We've got a minimum of 8 million people that we are targeting, we work with. But we're also introducing Wi-Fi technology throughout parks. We've got sensors to work out where people are. And we've got the ability to push information to them, to sell more products in park, to let them know what's going on with regard to rides, whether they can get a ride immediately or wait a while. So there's a lot on the technology front that will be very positive for us and will help long term.
Jim, we got a staggeringly bad December retail sales number this morning. Did you see in the parks, certainly your warm weather parks, did you see any deceleration in growth?
No, we saw an acceleration. So let me be really clear, because I think that this, what you talked about with the share price, to me makes 0 sense. We saw in the quarter, including December, our highest ever holiday in the park sales, ever in the history of the company. So we had a fourth quarter with growth in attendance, 5%. We had growth in revenue, 9%. We had growth in EBITDA. So everything went up. So quarter and full year, record performance. So we're not seeing that deceleration. Could it come in time? Anything is possible. But at this point, the American consumer, especially Six Flags guests, are loving what we give them, and they're coming to our parks in ever greater numbers.